price of gold
closing above $4,000.
Reaching heights it has never seen.
The price of gold hit $4,000 a troy ounce for the first time, the most ever.
In 2025, gold did an absolutely incredible, close to 60% rally, something that was unprecedented and something that was not on the cards. It was not expected, and many people were taken aback and surprised by how that happened. In today's video, we will dive deep into why that happened, and let's understand what is happening in the gold market today. But before we go into that, let's understand what were the driving forces behind what happened in 2025. Gold surged to fresh all-time highs in 2025, crossing the $4,000 per ounce mark for the first time. Even aggressive forecasts did not anticipate such a rapid rally within gold. But this wasn't just a random spike. It was the result of powerful forces building quietly over years and finally converging. In this video, we will unpack exactly why gold rallied this aggressively, what has been moving the price of gold, and what this eventually means for markets, business, and everyday consumers. Hi everyone, Assalamu alaikum. I am Mubassir and you're watching Food for Thought with MMS. In this show, we talk about big ideas, macro level ideas that move the markets and business and influence the world as we know it. On today's episode, we are looking into why the price of gold rallied close to 60%, an unexpected, surprising, bullish rally in gold. We'll dive deep into the different factors that contributed to that rally, and let's together understand why gold moved the way it did, so that we can have a better understanding and clarity as to where gold will head out most likely within this year and beyond. Let's start with why everyone was suddenly talking about gold again this past year. Search volumes were climbing across the globe, headlines running daily updates, social platforms full of debates. And for many people, gold felt like the asset that was actually moving when everything else looked uncertain. There were obviously several triggers behind this: record prices, renewed geopolitical tension, persistent inflation, central banks increasing their gold reserves, a softer dollar at times, and retail investors jumping in. But beneath the surface, this rally had much deeper roots, and those were the ones that really mattered. And in this video, we will try to understand into those structural factors which actually influenced this incredible rally. Because we're not that fazed by random spikes that happen in markets. That a lot of time tends to be just noise, which then settles down over time. What we want to understand are the structural factors which influence the price of an asset, and eventually we want to come to that point to determine the fair value of an asset, and that is when investors get to decide whether an asset is at a discount to buy or is it at a premium where they would like to sell. First, gold is reacting to global liquidity expectations. As markets anticipated future rate cuts, gold responds immediately. The mere expectation of easier policy lowers real yields, and gold thrives when real yields soften. Now, this is important to understand. Gold itself is not an asset that generates yield, but it is an incredible, proven long-term store of value. It is a beat against inflation. It is an asset that has proven itself to be a safe haven. In times of uncertainty, people go towards gold. So whenever interest rates are going up, interest rates are offering more favorable yields, then investors have a tendency to go towards safe havens, and gold then certainly and it is just on the expectation. Even if rate cuts have not been in play right away, it is just the expectation of rate cuts which excites investors, and they then flock towards safe havens like gold. Central banks are buying gold at historic levels. Central banks, especially in emerging markets, have been aggressively diversifying away from the dollar. China, India, Turkey, and parts of Southeast Asia, this buying isn't emotional, it's strategic. They're building reserves in assets that cannot be sanctioned, frozen, or politically weaponized. This is an important paradigm shift, and some say without falling into the ambit of conspiracies. People are looking towards whether the petrodollar is there to stay, or whether the era of the petrodollar dominance is likely on its downfall or on a downward trajectory. Because on one end, we're seeing BRICS nations talking about maybe launching their own their own gold-backed currency. If that is something that is on the card, is this why central banks around the world are buying record levels of gold? They're building those gold reserves to then eventually launch their own currency, which would then compete with the petrodollar. That is something which we will see unravel over time, but that will certainly be a competition to witness, and something whether that level of dominance can be dismantled or not is certainly up for debate. The jury is still out. But absolutely that there is merit to the argument that might be a possible scenario that is on the cards with respect to this unexpected surge in central bank buying of gold across the world. Geopolitical risk is driving demand for safe assets. 2025 was a year where geopolitical tensions felt persistent, not temporary. Whenever the world enters a phase of structural uncertainty, gold becomes a global insurance policy. This has, whether it is a time of war, whether there is supply shocks, whether markets are crashing, gold has proven to be that safe haven that investors flock towards. For a long period of time, people had tied their hopes toward Bitcoin to be that digital gold, but up until the recent years, where we've seen gold rally in uncertain times, Bitcoin has not yet lived up to that expectation. There's still believers in Bitcoin. There's still a massive hodler community out there, so to speak, that are holding on for dear life. But as a safe asset, as a safe haven, as a digital gold, as an alternative to gold, there is merit to both sides of the argument. Some would make the case that Bitcoin is the right replica, but again, whether Bitcoin is the digital gold or not, the alternative is the digital gold, the alternative safe haven beyond the traditional years proven gold. That is something is up for debate. If that is something you would want me to talk about further, then you can let me know in the comments below, and one of the other episodes on this Food for Thought with MMS series will definitely talk about whether Bitcoin has lived up to its promise, or one of the promises, to be the alternative safe haven to gold. If that's something you would want me to work on and talk to you about, then definitely let me know in the comments below. But coming back to this video in particular, physical supply of gold is limited. This part is often overlooked. Mining supply hasn't grown meaningfully, new discoveries are rare, capex cycles have been cautious, and recycling remains stable. So you've got strong demand sitting on top of constrained supply, and that alone is bullish for prices. But the question is, why now? Why 2025? Even though inflation came down from the peaks of 2022, it did not come down to its target. The US Fed targets a 2% inflation level, and services inflation remained elevated. Food and fuel prices were still squeezing consumers across many regions of the world. And sticky inflation always increases the appeal of gold, because it is that safe haven in uncertain times. While the US Fed has remained cautious, and even now in 2026, the anticipation as of today is maybe one interest rate cut. Now, the dynamic has significantly shifted as to where we were in 2025. Now the conversation is primarily about the crude oil, the price of crude oil going up, the supply shock, the Strait of Hormuz, what's happening there. That is most definitely a topic that should be discussed and explored further, and you will find me talking about it later on within this series or this channel as a whole. But we have to understand that with all that is happening, with crude prices going up, the inflation is inevitable to go up as well. And when inflation goes up, the US Fed has no choice. Central banks around the world have no choice but to manage that rise in inflation by raising their interest rates. So while the markets as a whole and the rally behind gold was anticipating a decline in cuts, what's happening today has certainly put that agenda on a hold for now. And as of right now, the projection projections are towards just maybe one interest rate cut, and that too towards the end of this year. But that is how the markets are constantly evolving. There are geopolitical factors, there are macro fundamental factors, there are economic factors. There are many things that come into play that influence the lives of markets, businesses, all the things that happen around us. But with respect to gold, coming back within 2025, the interest rate, there was caution around interest rates, and just the expectation of it was bullish for gold. But then gold, the interesting thing is gold responds less to actual rate cuts, but just the expectation of rate cuts is also a factor which was instrumental in pushing gold towards its incredible rally in 2025. Another important thing to understand is we are living at a time where the US and the record debts all around the world. For example, even the US, close to $40 trillion. I mean, mind-boggling, the number itself, but close to $40 trillion in debt for just the US alone, and rising debts across the world. And this level of uncertainty makes investors cautious. They makes them uncertain. They makes them afraid to take risks. And they then, another factor, they flock towards safe assets, safe havens, and gold is definitely one of them out there. So this was another one factor which pushed investors towards gold. Another factor is the China's economy slowdown. With China navigating a prolonged property sector slowdown, domestic investors were seeking safer assets, and gold is the simplest non-dollar alternative. What happened in the real estate market within China over the past year and a half, 2 years, is something that was not that obvious, something that was not maybe expected for someone who is watching the markets from afar, and that was certainly surprising. And that then has, for a huge economy like China, a real estate bubble crisis, and then the ripple effects across the economy. You have to understand, when the Chinese economy shrinks, that means the export segment shrinks, and that means the manufacturing segment, that means the consumption of energy goes down, that means the export goes down, that means the entire macroeconomic structure of how the world is integrated in today's modern world, that gets significantly impacted, and that overall creates an aura of uncertainty. And again, when there's uncertainty, investor wants to go towards the safer assets, and gold is another factor why in 2025 we saw gold find that rally. The biggest beneficiaries. Now, we've talked about the uncertainty, we've talked about the risk, we've talked about why investors went, but let's have a look about who were the biggest winners out of it. One of the biggest winners were the gold mining companies. Of course, when gold is rallying, the price is up, that means the margins go up, and then the profits go up. Projects that they had for years shelved or parked on a pause or put on a cold burner, they then certainly suddenly seem viable and feasible, and seem to project an attractive ROI. So gold mining companies were certainly seeing the upside of, or their businesses were seeing a significant tailwind because of this bullish rally within the prices of gold. And across markets, whenever gold rallies, treasuries and risk assets enter a tug of war between the safety demand and macro uncertainty. Beyond just miners, for regular companies, the impact was mild. Jewelry demand stays steady, not surging, but for miners, this is generally a massive profit cycle, and some restart projects, as mentioned, the restart projects that were previously uneconomical, but at the same time, while they are shifting their approach towards projects, you have to look at the consumer end, whether it is the consumer of jewelry products or just buying those gold bars as at Costco's or other options just to as an investment alternative. This rally is felt most by consumers in South Asia and the Middle East, where gold is both cultural and financial. Buyers feel the pinch as prices rise, but interest always remains high. Especially because within South Asia and Middle East, there's a cultural association with gold as well. You've got your wedding seasons, your other festivities, and gold is an instrumental part of the culture as a whole. So even though it feels a lot of a burden, it feels very cumbersome, but call it peer pressure, call it cultural norms, call it societal pressure, but people within my part of the world are proactive in still sticking up to their purchases of gold. Now let's just put this all together. We've talked about many factors which influenced the incredible rally behind gold, but let's just try to bring it all together that here's the simple truth. In 2025, the rally in gold is the result of multiple long-term forces coming together at the same moment. There is no short-term spike. It's a structural move built on geopolitical risk, sticky inflation, liquidity expectations, slow supply growth, and record central bank demand. Collectively, all of these factors have influenced the surge in the price of gold. And even now, as I speak in 2026, I do not anticipate gold prices. There are no clear signs that these prices will be falling down. The uncertainty risk is still high with the uncertainties in the Middle East, with what's happening in different parts of the world. The uncertainty is there, the risk is there, people are unsure what is happening, and in such situation, gold is primed to rally. So as of right now, I'm not anticipating these prices going down any further. We might, who knows? I would not put any number out there, because at the end of the day, this is not, this is purely educational content. This is not financial advice. So my job here is to look at the different data points, to analyze the different factors influencing what is moving markets. And in this show in particular, as I said, we'll be talking about the big ideas, the macro level thinking that is moving markets, influencing businesses, shaping the world as we know it. Yeah. So to sum it all up, the gold demand is structural, the world is risk heavy and yield light, and central banks are rewriting the long-term gold playbook. If you enjoyed this breakdown, if you like this content, please show your appreciation by pressing the like button, share this within your network, and most definitely subscribe to the channel so that you can stay up to date whenever we post similar content. And I hope you enjoyed this. I hope you found this insightful, and I will most definitely see you on the next one. Thank you and take care.